Hey everybody, Scott Riley, the Market Update Desk with Mortgage One. It's May 30th. We got some good news from a mortgage standpoint this morning. The big report today was going to be the second look of Q1 GDP. What did that show us? We talked about in previous videos that we might see a revision downward on this report, specifically retail sales, consumer spending starting to contract because we have seen some sub-reports show that. Well, lo and behold, we saw a revision from the previously reported GDP number of 1.6 on the first look. Now, for the second look of first quarter GDP, revised downward to 1.3%. So that was a good factor for the bond market because it's starting to show some slowdown of the consumer spending, which is what the Fed really wants to start to ease inflation. A really important factor within this report, they have a real-time PCE derivative within it. What did that show? Well, it showed us that both headline and core real-time PCE were 1/10 lower than what the market was expected. Now, that could really foreshadow some positive news on the PCE report tomorrow. So we're really looking forward to what that's going to bring. Also, an interesting tidbit within the GDP report was something that helped the bond market and gave us a lower GDP reading was the chain weighted price index came in less than expected. This is showing us that we could have some slowdown or better inflation within the report. And that's why those real-time PCE numbers came out a little bit more positive than what the market expected. Another report today was pending home sales. And everybody knows we got a little bit elevated on rates. So we did see a 7.7% decline month over month of existing home sales. The market was expecting a 6% decline. So we're not too far off that number, considering the lack of inventory, considering the rate environment and the media environment. It wasn't actually a bad report. On the rental side, apartment lists came out today, showed a month over month increase of 0.5% for rent renewals. Now, rents overall are down about 0.8% year over year. Now, what's interesting is now that we're in the May, June, July category for the year, normally that's when we see some accelerated rents because that's when a lot of rents come due and renewals come up. So to see that it was only up 0.5%, very positive factor. And as those rent prices steadily flatten or decline, those roll into PCE and CPI within the shelter costs. So those are good news. Jobless claims came in a little bit more than expected, 3,000 up. So we have a 219,000 initial unemployment filings. Now it's still on this very, very tight tunnel trade line of initial filings, which everybody just is discounting because it's statistically impossible to get the numbers that the BLS is showing. Another item today was the Fed Beige Book numbers, or information came out from the last Fed meeting. It did show kind of across the board pessimism as far as the rate of inflation decline. So the negativity there definitely was shown through from Fed member Kashkari's comments 2 days ago. And we do have a couple Fed speakers that are probably going to come out and speak today and tomorrow. So there is a bias towards not lowering rates. But if we can get some positive inflation data that could be flowing through and higher than expected employment data, that's going to change these pessimistic to more optimistic interpretations from Fed members for rates. So that's what's going on today. We're waiting anxiously for tomorrow's PCE numbers. Have a sneaking suspicion they're going to come in 1/10 lower than what the market's banking right now. And that's going to give us positive news on the mortgage rates. Today, in the 10-year Treasury is down about 6 basis points, and the mortgage-backed securities are up 20 basis points. So we got positive green, positive green in the market today. So that's a great thing to report. Hope this helps you out understand what's happening out in the market. Scott with the Market Update Desk, your original singular West Michigan news source for market moving information. Give us a call, 616 293 2189.